Oh, okay. Well, welcome back to another day and yet another news breakdown that I have to do because, as usual, people on the internet are pretty misinformed and spreading a lot of nonsense. So, I'm sure at this point you've probably heard about whether you're watching TikTok or Instagram or wherever you get news from and things, that there's a tax proposal, or a lot of these places are claiming that this is a new tax bill. This is going to be law. Unfortunately, that's not the case, though, as we're going to see. So the claim that people are making is that services like PayPal and Venmo and all these sort of smartphone transaction services, Google Pay, that type of thing, are going to start reporting to the IRS, and you're going to start being taxed on anything that you do when it comes to those services. Now, of course, I thought this was a little wild. This was definitely sort of excessive because, of course, the threshold that they set was $600, which, again, not very much. So let's go through this. Let's see what we can find out and get any more information and make ourselves a little bit better informed, because a lot of people don't know what the hell they're talking about. So here we are, USA Today. Fact check. Treasury proposal wouldn't levy new tax on PayPal Venmo transactions. Okay, so get that out of here. The claim. Borrowed funds exceeding $600 deposited via smartphone apps would be taxed under a new bill. A proposal from the Department of the Treasury aimed at decreasing tax avoidance has become the subject of misinformation online. One Facebook post claims the new tax bill would tax transactions exceeding $600 on smartphone apps like PayPal and Venmo. Quote, that means if you borrow money using any of those things over $600, that money will be taxed again, reads a September 20th post, which was shared more than 1,300 times in 4 days. You know who deposits $600 or more into their bank account from outside sources to help them survive? The poor and middle class. Okay, so let's break this down a little bit here. The post is talking about borrowing money, which is a little misleading because most of the time when you're using like Venmo and PayPal and all that, like you're either running a business or paying a friend back on your like Cash App and Venmo. Always, if you go out to a restaurant or something and people want to split the bill, it's always like, oh, Venmo me, I'll take the bill, whatever. So borrowing seems a little strange. Like technically, yes, you're like borrowing money temporarily from a friend, but then paying them back. And the thing is, it's like who deposits $600 or more into their bank accounts from outside sources? Outside sources literally could be anything. I mean, like I get a paycheck from my job. That's technically like an outside source. Is that what, I wonder if that's what they're talking about here? Which again, and of course, the poor and middle class, like everyone deposits money into bank accounts. That's just kind of pulling at the heartstrings a little bit. So the Treasury proposal would change reporting requirements to account for transactions made on smartphone apps, but the claim that it would levy new taxes is wrong. Very important to remember here, okay? There are no new taxes being proposed here, okay? It says it looks like the proposal is just extending to more entities the obligation to report transactions exceeding $600. Karen Brown, a tax law professor at George Washington University, told USA Today in an email. It places these bank surrogates in the same position as others. It is clearly an anti-tax avoidance measure. Sure, so tax avoidance would be something like tax avoidance is different than tax evasion or tax fraud, where you're doing something to get a tax advantage, right? So oftentimes, if you own your own business and you need to purchase a car or a vehicle, you can write that off as a business expense, stating that you're using it for your business. You're using a vehicle specifically for business purposes, right? I know other people who do this when it comes to starting your own business, registering your business in a different state to get lower taxes on that, but then conducting business in a different, in a completely different state, the state where you live. So if this bill, or this proposal, not bill, I gotta be clear on that, is aiming to cut back on that, okay, I get it. It's trying to get people to be more compliant, right? Because we know, the two things we know is that when tax compliance, when you have a third party, outside person, like verifying information, like for a W-2 employee, that tax compliance, we know that's 99%. People are paying their taxes. When it comes to small businesses and self-reported stuff, we're at 45%, meaning people aren't being very honest. So yeah, the proposal does not suggest a new tax. The Facebook post misconstrues a Treasury proposal that suggests broadening financial reporting to improve tax compliance. And we just talked about that. In May, the Treasury proposed requiring financial institutions to report to the Internal Revenue IRS annual inflows and outflows from most bank loan and investment accounts. The requirement applies to accounts whose inflows and outflows, including paychecks and transactions made via smartphone apps, add up to $600. The details of the individual transactions would not be reported. So now that's important. So that means that no matter what you're getting money for, it doesn't matter what you're getting money for. They just want to know that you're getting that money. Okay. So the proposal is an effort to reduce the country's annual tax gap, the difference between taxes owed and taxes paid, which the IRS estimates to be roughly $166 billion per year. It does not suggest levying new taxes. So already we can see that people are very misinformed about this, right? Because a lot of the stuff I've been hearing about this, or a lot of the information on like TikTok and all this other stuff, talks about, oh, they're going to start taxing money they wouldn't have taxed before. This money wouldn't have been taxed. It's a new tax. People are getting screwed. It's not, though, right? If you are making income, right, whether it's $600, $1 million, whatever, if you're making income, there are taxes you pay on that income, okay? So if you are not reporting that, that's avoidance or evasion if you're not doing that. Let's read on. So first off, the proposal does not change what is taxable in any way. It does not authorize the Treasury to expand what is taxable at all, David Super, a tax law professor at Georgetown, told USA Today in an email. Second, the proposal does not specify what particular reporting standards would be adopted. Okay, that's also important. It's very vague because right now, this is just a proposal. It's not actually, none of it's actually going to be tax law or anything like that. Nothing's being voted on. There's no legislation that's been drafted. As far as I've heard, none of that. The claim that borrowed money would be taxed is nonsense too. Personal loans are not considered income and cannot be taxed unless they are forgiven, according to Investopedia. So again, it's also important. Giving money to somebody is not taxable. Okay, money you receive as gifts or personal loans, which is what it is. Technically, when you go to the restaurant and there's a bunch of your friends, there's all 5, 6 of you, whatever, you're hanging out, and the check comes and one person says, hey, I got this, you all can just Venmo me or Cash App, whatever, what you owe me. Technically, you are temporarily giving your friends a personal loan for that amount of money, for whatever their part of the check is. And then they're paying you back right away, and then the loan's forgiven because, well, it's all paid back, right? Or not forgiven, but the loan's all paid back. Forgiven would be if they forgave your debts and said you don't have to pay me back. The statement that borrowing money will be subject to taxation is false. Loan proceeds have never been income and hence have never been taxable. Important to remember. It is absolutely false that poor people or anyone is taxed on borrowing funds. That's the quintessential feature in our tax system. Borrowed funds are not subject to tax because of the borrower's offsetting obligation to repay. Joey Gates, the Facebook user who shared the claim, told USA Today in a Facebook message that, regardless of whether I have a misunderstanding of the tax proposal or not, it is baffling to me that more money would be collected from taxpayers while we leave billions of dollars of taxpayers' money in Afghanistan. Okay, of course, you deflect, never wrong, it's always the big government's fault, whatever. I was never wrong, I'm always right. This fellow, Joey Gates, probably dumb as a brick. I may have misunderstood, but it doesn't matter. If I'm wrong, it doesn't matter. Oh, it's the government who's wrong because of all the money they left in Afghanistan. Okay, first of all, you're probably ill-informed. You probably don't know anything about what's going on in Afghanistan or what went on in Afghanistan. You're just looking for a scapegoat, looking for something to deflect from you being a colossal moron and not knowing how to read anything. So, Joey Gates, you're a moron. Our rating, false. Based on our research, we rate false the claim that borrowed funds exceeding $600 deposited via smartphone apps would be taxed under a new proposal. A Treasury proposal would require financial institutions to report annual inflows and outflows, including transactions on smartphone apps for most banks' loan and investment accounts, but it would not create an additional tax on those funds. Personal loans are not considered income, so they cannot be taxed unless they're forgiven. And of course, they have their sources and whatever. Now, if that's not enough, we have other sources, okay? So we now have PolitiFact, another website, and another claim. So this claim is from InfoWars because they are the absolute greatest when it comes to telling the truth. said in an Instagram post that Biden's Treasury Department declares IRS will monitor all accounts over $600. So let's see what we read on here. If the Biden administration proposal now being considered adopted, financial institutions would be required to report more information on the accounts of everyday Americans to the IRS. The stated goal is to collect taxes from rich individuals and businesses on income that is earned but not reported. That's right. That's basically what we talked about before. So when you have a business and you're earning income, you have to report that income that you're making, right? Let's see. So the proposal, however, would affect more than just rich people, with disclosure requirements that cover the vast majority of bank, loan, and investment accounts. Even so, a headline widely shared on Instagram from InfoWars, the conspiracy-oriented website run by Alex Jones, contains only an element of truth. So the headline says that they would come after you. The article under that headline goes on to make a more far-reaching claim that the IRS will audit virtually all financial transactions of Americans with bank accounts holding at least $600. That's basically what the claim. This is the general claim that I've seen made on things like Twitter and TikTok and stuff like that, where they're making these claims that these are going to be taxes that normally wouldn't be collected. Now they're collecting this new tax. It's going to screw everybody. And the post was flagged. So let's see, the Treasury Department has made no such declaration. For now, the proposal to tighten bank disclosure requirements is just that, a proposal. That's what we said before, look at that. And while it would feed more financial data to the IRS, it does not call for IRS audits of virtually all financial transactions. The Treasury Department made the proposal in May 2021. The Senate Finance and House Ways and Means Committee could adopt it as part of budget reconciliation legislation that they are considering. Under the measure, financial institutions would be required to annually report gross inflows and outflows from all business and personal accounts, including bank loan and investment accounts, if the inflows and outflows of an account total at least $600 in a year, or if the account has a fair market value of at least $600. Now, the fair market value thing, that could be talking about like cryptocurrency or something. That could be, I don't know. Most of this stuff hasn't talked about cryptocurrency at all, so we don't know what that is. Let's see. So, for example, if you had at least $600 in your bank account, the bank would be required to report the amounts of any debts or credits to that account to the IRS. If the debts and credits that flow through the account add up to at least $600, including deposited paychecks or electronic payments through smartphone apps tied to the account, those totals would have to be reported as well. Under the measure, the banks would report only the total inflows and outflows, but no details on individual transactions. Again, that's pretty good. It kind of keeps you able to buy whatever you want, do whatever you want, and not have to really say, oh yeah, I did it because I bought shoes or whatever it is. Also, because you don't have to worry about the details, this lets you do things like buy cars and still write them off as like business expenses and not have to like justify why you bought the car. If you take this at face value, right? In making the proposal, the Treasury Department said the IRS estimates that for business income outside of large corporations, the tax gap, the difference between taxes that are owed and collected, is $166 billion. We read that before. The Treasury says the focus of the proposal would be on higher earners who do not fully report their tax liabilities. Okay, fair enough. We want people to pay their fair share, right? The proposal's possible implications. So we're getting to a little bit of speculatory. This is possible implications, so this is going to be speculative. The American Bankers Association opposes the measure. The proposal would create a significant burden on small businesses and community banks and add no discernible value to tax enforcement. The group said in September 7th a letter to the House and Senate committee leaders, adding that it is far from clear that requiring banks to report on every single customer financial account with gross inflows and outflows above 600, creating a mountain of new data, will lead to better tax compliance. So they're saying that they don't believe this is actually going to do what it says it's going to do. Okay. Chuck Marr, Senior Director of the Federal Tax Policy at the Center on Budget and Policy Priorities, said that the proposal would help identify business and partnership owners who report relatively low income to the IRS but have millions of dollars flowing through their accounts. So that's what they're trying to go for, right? Wealthy individuals who have a lot of money flowing in and out, but maybe on paper have a very low income. It just helps the IRS get better at finding non-compliance, finding people who are cheating. Okay, fair enough. Increasing compliance, getting people to pay their fair share. This is not bad, right? This isn't terrible. Marr said setting a low threshold of 600 would make it harder for tax dodgers to set up multiple accounts to avoid having the activity in those accounts reported to the IRS. So that's, again, that's where that $600 comes from, right? So right now, I don't know what the threshold is, but obviously it's much higher, and it makes it easy to say I can have like 10 bank accounts, each with a bunch of little funds in them, and only ever do a little bit of transactions, here, there, whatever. The Treasury has made no such declaration. The department, our ruling, sorry. The InfoWars headline, widely shared on Instagram, stated that it would come after all accounts over 600. The Treasury has made no such declaration. The department has made a proposal that Congress is considering. Under the proposal, financial institutions would be required to annually report the total in and out from bank loan investment accounts if the total is at least 600 a year, or if the account's value is at least 600. The headline contains an element of truth, but ignores critical facts that would give a very different impression. Mostly false. Of course, it's going to be mostly false because it's goddamn InfoWars. And of course, similar sources to what we had before. So, what do you get from all of this? Okay, so we have tax proposals. Again, there's no legislation being drafted. There's no laws being put into effect. I saw one TikTok claiming that, January 1st, 2022, you're going to have to start paying taxes on your $600 accounts. That's 100% not true. Now, is this going to be difficult? Is this going to now make it harder for small businesses to deal business? Maybe, perhaps. I mean, it's very possible that a small business is going to be a little, is going to struggle a little more now. Because they have to report more, whatever. But at the end of the day, if you're making income, it has to be reported. Now, notice what's missing from this whole thing is percentages, right? None of this, so far it's saying, here's a threshold that we're setting. No one's saying, here's how you're going to be taxed, like what bracket you're going to be in, right? Maybe you report your business makes only $600 a month or $600 a year, but there's no indication as to what bracket you would be in that. Maybe it's really low. Maybe they don't even tax you on it. Maybe $600, they report it and they say, oh, okay, you don't owe anything because it's below a certain threshold. We don't know yet. But anyway, I hope this was informative. I hope this kind of got some of the facts out there, cleared up a lot of the confusion and stuff, at least that I see this going on. But anyway, let me know your thoughts in the comments down below, what you think about this. Will this affect you? Do you do more than $600 in Venmo transactions in a year? I'd love to know. Anyway, and I will see you all next time.